news to me. Obviously, many of us will know about the bank because they're involved with the current support schemes, the business interruption loan scheme, bounce back loans. But interestingly, the network was originally announced back as part of the industrial strategy in November 2017. And Paul's been there since December 2018. But obviously, our conversations today are going to be focused on the support for business. So I think without further ado, Paul, can I hand over to you?
You can. Thanks, Jill, and good afternoon, everybody. Yeah, it's been really good to be here. So I've got a 30-year history in finance, mainly in corporate and commercial banking. Two stints with Lloyds Bank. The first one as a relationship director, credit controller, etc., etc. Then I spent 10 years in industry, in SMEs, mid-markets, trying to get money out of banks, which was a little bit harder and a little bit different. But both here and globally, and came back into Bank of Scotland around about 12 years ago, and ended up back at Lloyds Bank with the same file number and everything else, where I had a leadership role across the Southwest, and then latterly 3 years in head office doing all the various regulatory changes and things that were going through. When I took a package from the bank back in August 18, I was looking for something a little bit different that gave back, in the same way that my early banking career did, of working with SMEs, mid-market clients in helping them to grow their business using finance. So British Business Bank really sort of stood out for me. For those that haven't heard of us or have only picked up the name recently, it's not a huge surprise. We're an economic development bank, so we're not a bank per se. We don't lend money directly. We're owned by the Department of Bays, and we are an arm's length PLC, so we have our own risk profile, or we did until very recently, until the Treasury told us what to do. And we look, and our mission is actually to make the finance markets work better for all SMEs all over the country. And where we think, we were formed in 2014 under Vince Cable, and if we think back to those sort of darker days at the back end of the financial recession, the banks were moving into a different way of lending, perhaps not quite as open. At the time of recession, they were 92% of all funding in the UK. They're currently about 81%, and likely to drop. And that isn't because they're doing less. That's because we have more alternative finance available. And that's a huge part of our mission, is to help those alternative finance to have the right capital base to be able to access markets and deliver for SMEs in the same way as banks always used to develop new products. And we particularly work with fintech and that type of business, to bring the new solutions to make everything work for the future. And that's really been borne out or accelerated in the difference between dealing with the recession in 2009 and being able to step up and help with the COVID crisis we're currently under. We have six objectives, or six objectives set for us by government to increase the supply of finance. So ensuring that there is finance to all the corners of the UK, to make sure that that's in its fullness and that no market is underserved. And we've done a lot of that by investing wholesale into businesses, altering the market, the way markets work. And our mission is very much to come in, change the market, and then move back out. To create a more diverse finance market, we've seen a number of different types of products coming out over recent years. And again, we ensure that they're publicised, they're capitalised, and they're fit for purpose going forward. The reason that our team was set up back in 2017 and really got to work at the end of 18 was this: help identify and reduce regional imbalance. It doesn't take very long to research that the finance systems of the UK all tend to have head offices and be very London-centric. Obviously isn't great, as only 20% of our high growth businesses are within London, meaning 80% around the country sharing on a very small amount of the finance that's available. That said, a lot of people do seem to find their way into London to get hold of different types of finance products, but we'd really like to see that more local decision making, understanding the region a lot clearer. And to that background, British Business Bank operates, manages the Northern Powerhouse, Midlands Engine, and the Cornwall and Isle of Scilly funds. So we're quite astute in taking some of our money, some government money, but also taking money from Europe, as was. Obviously, hopefully we won't talk about Brexit on this call because I haven't got a lot more to say than we already know. But Brexit has obviously changed the way we're funded from Europe. But those funds, £400 million in the north, £250 million in Midlands Engine, are really starting to. They do two things. One, that they become a gap funder and help the businesses generate more cash, but they also generate a lot more interest and start to solve, bring more ideas and more ecosystem to the areas, which we're very keen to do, and very keen that we do something bigger across the southwest in time as well. Encourage and enable SMEs to seek the best finance. We have within our website the Finance Hub, which is a general website which is about to become more regional. So that was on the cards for this first half of the year. Although I think my marketing department and people have probably been a little bit busy with COVID. So we'll see when that comes. But what we're looking to generate in that is a agnostic site where we can compare different types of products and get some understanding, which is nobody trying to sell anything, to share the facts. We are the centre of expertise on smaller business to the government. So if any of you are as sad as I am that you follow the Dodds daily briefings, any question that comes out of the House which is finance related, it comes onto British Business Bank to answer, which does create some quite good stuff in that we generate a number of reports which we share, and they're on our website, which I'll talk about in a little minute. And then we're an unusual quasi-government enterprise in that we actually make a return. So we're forecast or we're asked to make a minimum of 3% return. We currently make a little bit more than that, around about 5-6%, based on some of our investments from the past. Our products are I wouldn't say simple, but we operate. We've got about £7 billion in the marketplace. Every pound we put in wholesale is equalled, or quite often 2 or 3 times that by the private enterprise that it goes with. So we look to Cornerstone fund of funds to make sure that money's going out to various places. One of the places you may, and I think is going to become very apparent for us, is in startup. Go back 10 years, the UK was sadly about 17th, 18th in the world for startup businesses. We're now proudly, and have been for 3 or 4 years, in the top 5 and constantly stay there. And one of the products that helps that is a £25,000 startup loan for where a bank wouldn't do or wouldn't step in. And we're proud of that for a few reasons, really. £500 million helping 90,000 new businesses start. But it's also very, very balanced or not balanced, actually. It really helps out female entrepreneurs, BAME entrepreneurs, and those that haven't worked for a while. So it's a really great benefit. And what we've seen, we thought through the COVID period that would go quieter, and we'd start to look at provisions and different things that we thought, which is quite the opposite. So that there's been a little bit of an insolvency conversation, but nothing major. But what we've actually seen is the hits on the website go up by about 30%, and we're actually seeing more loans coming through. So we're already at this point in the pandemic seeing people that maybe have lost a job or have gone through a change, already starting to invest in the future, which is great news. Before we go on to the COVID, just wanted to share really that we haven't stopped. We haven't stopped working, so it's probably a little bit less investment than we would normally do through the first half of a year. But here's some examples of £165 million we've invested into funds and funds and debt funds within the UK, which is a share, and just show 165 million becomes 650 million of fund size. And some of those, Columbia, Harwood, are in debt. markets. Tosca's makes early stage and Series A investments in venture capital. Startup and PAR are both angel groups, and a very important part. We recognise, I think, going off the top of my head, but around about 86% of all angel groups are within London. So we're investing in angel groups, £100 million to alongside them around the country, and Startup and PAR Equity are two examples of that £100 million being shared outside of London to push angel investment and really help that local. And then Azes Capital, 15 million was part of a £100 million fund, which is aimed at debt towards home builders, house builders, where the banks are unable or unwilling to support. So it's not a cross section of everything we do, but these are all investments done, most of them while we've been on lockdown. So the business carries on making those investments as we sort of look to grow our £7 billion invested to around about 10 to 12 billion under the present guise, but it will go beyond that, and we'll look at that as we come out of this period. I talked about some of the publications. I would normally really push these and say the small business finance markets and the small business equity trackers are great productions to have a look at how the market's working, what's growing and what isn't. I fear that especially with the small business finance review being released only in February, March, the world's changed a little bit already. So we'll see its relevance as we move forward and if we need to update that. One of the ones I'm really proud of in there, or we're proud of as an organisation, the UK VC and female founders. I think anybody that's seen anything on equity to female groups over the last 18 months will have heard a statistic that only 1% goes to all female founders. That came from that report, which we did alongside BVCA, and really sort of happy to and proud to be able to sort of talk about the 18 or 19 initiatives that are going on, and that figure, although not updated quite yet, is likely to move from 1% to around about 4 or 5. But we'll also see a growth in mixed male-female founders and how they get equity. And there's really been a march towards moving that to a much fairer system, and a lot of debate, which is a great thing to see, because the empirical evidence is that a more balanced founders are actually more successful. So we'll see where that plays out. So coming on to COVID, I think most of you will have heard of some of these schemes. They've been a little bit prominent in news over time. But going back to the end of March, on a fateful Thursday evening, we got final sign off to the state aid rules. The teams internally worked very hard over the weekend with the leading banks and a few of the funders, and launched a thing called Coronavirus Business Interruption Loan Scheme, which, no surprise, it got abbreviated to CBILS on a Monday morning. Going back a while, I think it would be fair to say something that would normally take six months to a year to launch was done in 3 or 4 days. There were a couple of faults in there, which we spotted early. The banks weren't quite ready. The personal guarantees had to be removed or moved below 250k. And there was quite a complicated clause called additionality, which said that the money had to be used for something additional to normal business, which just didn't make sense with COVID being the main issue for it being used. So off we went, and with those out the way, it's been flowing quite well. The figures at the bottom of the screen are actually up to date, so they were released this morning. So you see they're just over £10 billion in CBILS, helping out just shy of 50,000 SMEs, which is great news. One of the things we did spot within that is 80% guarantee from government, interest-free for 12 months, and any fees that the borrower has to pay are covered by us. What we did find out is that as we move forward, that the lenders, and there were 41 of them originally in the scheme, tended to look after their own clients, which I sort of understand. But what it meant, if your lender wasn't one of them, or your bank wasn't one of them, then that wasn't going to work. So we've actually changed, and I personally I've been working on an accreditation team, writing credit papers, which I probably haven't done for 12 years, which has been quite interesting. But we've moved that number now from 41 to 86 announced. And I'll tell you confidentially, but don't share it, that number will go over 100. So we feel that we've found a way of serving roughly 99% of the population will be able to use their own bank by the time we get to, or their own funder, lender, by the time we get to the end of that. That said, Sybil still asks the banks to vet the application and to look at affordability and look at that closely. And it was deemed, with the slow start to the Sybil scheme, there was a lot of micro businesses and smaller businesses that just weren't going to be able to survive, and probably were finding it hard to make those cases under Sybil's. So the Bibbles, I sound like an infant school teacher, bounce back loan school loan scheme was announced, £2,000 to £50,000, 6-year term, no fees, no capital, and no interest for the first 12 months, and a really great interest rate of 2.5%. But what was more beyond that scheme was the process. So instead of going through a standard bank manager credit process, it's all automated through between 7 and 13 questions of self-certification with a few electronic checks in the background. Excuse me. And what we've seen is an extremely fast growth in that, and again the figures at the bottom, 26.5 billion out to 863,500 clients. So really important growth. Lots of money. I think the average loan in there is about £24,000 from memory, and that's been really great of getting support out very quickly to all corners. And I think unless I've read that different, has been a real sort of lifesaver of giving time for businesses to plan both today and how they cope, but also start thinking through to their recovery. And I've heard some great stories of where they've been forced online of sort of working to make that digital presence really, really positive. So for me, it's worked really well. And then I'll just talk briefly, the coronavirus large business. There is a scheme within Bank of England for the really large companies, CCFF, don't ask me to remember what it stands for, which was looking at bonds for the very, very big corporates. And there was a gap, and our mid-markets clients, are businesses over 45 million, were finding it hard to access any of the schemes. CL Bills is a little bit different, no interest-free period, a 3-year term, but up to 200 million of finance is available with various sort of parts hanging off it. The due diligence and the time to get to money is quite high. So we've seen 1.7 billion or 1.8 billion going out to 279 companies, and there's around about 600 that have put applications in, and we're seeing that quite a slow growth, but it's actually working very well. And then our latest one, so bear in mind, we managed to launch one product every 2 or 3 years. So we've had 4 products within 2 months, 3 months launched. Future funds probably a really exciting sort of change, and potentially, and we read about things like 3 Eyes in the paper, a change in the way we've worked. One of the gaps that was created by the state aid is that you're not allowed to lend to a business that technically was in difficulty prior to the COVID period, and the definition of that is if they've the 7 years profits or losses have been greater than half of the share capital. When share capital is quite a strict definition, so it doesn't incorporate loan notes or other investments. So some of our high tech, really good high growth businesses that were coming through, which obviously borrow very heavily in the early stage as they develop products and go to market, were falling foul and not getting the investment. Hedge funds and various funders have stepped in to help where they could, but there was still quite a big gap. So really proud that hashed out over a couple of weeks a scheme by which the investors, so it's slightly different, so an investment team would approach us to co-invest, using a convertible loan. Convertible loan being at 8%, where the interest rolls into the final equity swap or move. We're asking it for businesses to be £250,000 of prior in the last 5 years investment into them, and to be looking for loans between 125 and £5 million. What we saw on day one, and after, I would say, some difficult press, because it does exclude some of the smaller businesses where they haven't got 250k of investment yet, and it also excluded EIS and SEIS schemes. And against that background, we did see some criticism. On day one, 419 applications were received, which has grown over 3 weeks to only 577. So it's the vast majority came in. And we did 53 million last week, and a further 100 million, up to 146 million this week, helping 155 companies out. And you can see that the average investment is just below £1 million. What we should bear in mind is that 146 million is matched pound for pound by an investor or investors. So that's £300 million that's gone into hopefully our future high-tech, high-growth firms, which will be great to see through. Of course, the interesting part of this is at the end, we're going to see that the UK government, through British Business Bank, are going to end up with a shareholding in a number of smaller businesses or high growth businesses, which takes us back to those of us old enough to the 3 Eyes days, and there's been quite a lot of conversation about whether that's the right thing or the way forward. But whichever way, the scheme so far has been a success, and we look for that to grow in that as we move forward. Just before I sort of move off and ask for questions, the call, I was on a call just before this, and I think a lot of the movement now, the COVID schemes and the Future Fund are looking to support. We've seen the rest of the furlough scheme and the other government, and I think it's been a really great response in a very short time scale. If you compare it to the world, different countries, we're definitely seeing a lot of support coming across, and our minds, as we've calmed into a new norm, whatever that feels like or whatever that is, has started to move towards the recovery. And our main policy board and strategy guys, just today, going through the different workshops and government schemes operated through BEIS and different places, came up with 16 high-level government intervention workshops which are currently in place to try and come up with that right answer for what happens after September, when these schemes all come to a close under the present rules, and how that actually moves forward. My role particularly will be to look into the Southwest and what's happening across the Southwest, and try and help policy to go to the right places regionally. So I think in summary, British Business Bank quietly in the background has been going about its business and growing, helping invest, and then asked to step into the breach. Some of the plans we'd made for a hard cliff Brexit are the ones that we've used. Obviously had to tweak them for a slightly different format, but we've been able to step in and make those differences very quickly. It's now, how do we build on that legacy, continue to grow and ensure that the next sort of 2 years, 5 years, we continue to see the growth we did before, and not slip back, as you know, some of us can probably remember from 2010, 2011, when funding was hard to come by. So with that note, I'll open up to questions.
Paul, that's really great. Thanks very much. I know from a personal perspective, there's a lot more in there about what you're doing that I was completely unaware of, and certainly had a quick look at the research documents that you referred to. That I put a couple of things in the chat there, the link to the website, because it's a really helpful website, and I should have done my research beforehand. We've got one question already from Ian Smith, who's saying, how worried are you that the BBLS, as successful as it is just delaying multiple insolvencies of small and micro businesses? And I guess I'd add to that, you know, redundancies, and we had a brief conversation, but perhaps you could have a chat about that.
Yeah, definitely a concern, and definitely where that sits. I think it was deemed if we did nothing, or if Treasury did nothing, what is probably now about 6 weeks ago, then that would definitely have been the outcome, that we would have moved very quickly into redundancies and businesses shutting, and whether they would recover. By putting the Beebles in place, it's given that breathing space, and we've seen the queues yesterday at Primark particularly, but I don't know why, but across the but our retail sector, half of the high street came back yesterday, which is great, and let's see how that develops over the coming period. Without anything in place, that probably wouldn't have been the case, and a number of particularly of our smaller traders would have disappeared, and very hard to see how they'd come back. So the scales really weigh about doing something so we have a good percentage of businesses restart, and keep carrying that employment and grow, versus those that yes will delay and the redundancies will still come. From my own sort of measures and various conversations I hold across the Southwest, and so I am biased towards the big geography of the Southwest, in answering, has been that a lot of that money has actually been used for moving online presence, for changing supply chains particularly, and where there's been a reliance on, it's particularly in the early part on import, and that becoming unreliable for various reasons, beyond their control. I've actually found ways of sourcing better or more secure supply chains on a more local basis. Not to say export's not important, but that's going to help them through their regrowth. So I sit here, if I'm honest, and I'd answer that question. There's definitely going to be a percentage of these won't make it, and there'll be a percentage of the loans which don't repay. But we're working on the fact we believe that more businesses will prosper and grow, especially if more support comes from the base that the Beebles has allowed them to go through. So quote me again in a few months' time when we know the answer. But I'm optimistic, and I'm optimistic based on around about 40 or 50 different conversations I've had over the last 3 weeks.
Yeah, and I've experienced that myself. I've availed myself of some funding, and as you say, that's allowed me to diversify my traditional business. It's very face-to-face, and we're doing a lot more online, and yeah, I think there's more positives. James is asking, to what degree do you think this will distort the traditional funding channels, and what challenges that might bring?
That's it's quite an interesting one, because we've spent the last the last 10 years looking at how we replace the gap left when the banks retreated, which has worked really well. And if we were having this conversation in December or January pre-COVID, I would have said to you that we're seeing a huge growth. What we've actually seen through this period is where banks have been supportive and have helped their clients out. We've also seen that they've also got quite strict credit policy. They're quite slow. They're very, very slow to move. And when we saw businesses such as, I'm not selling anyone in particular, but such as Funding Circle and other market fintech businesses come on, then the numbers have moved a lot quicker, and that's producing some quicker changes. So in answer to that, we were heading towards a far more diverse finance market. The countries have got money out quickest. So I think early doors, if we remember back, Germany was quoted that they got the money out so quick to all their people. That's because they only have a handful of banks, and they're heavily government led. Because we had such a we've had to wait for the accreditation, so that we have more businesses online that we can help get that money out. So we've ended up in the same place. So there was a slight delay, but I think this has only gone from strength to strength to say we do need a large alternative finance market, and a lot of them have been able to, through not profiteering through Seabills, but have been able to really support their clients. And I see that growing more and more, if I'm honest, because they're more in tune to the regions, more in tune to the businesses, than a big London-centric, head office-centric bank can be. That said, at the end of the day, banks are low risk, low interest rate, and if you fit into their credit model, then that's brilliant, and they're really good at serving. But we see a lot more businesses today without assets, without traditional lending values that you take. Banks like to see 3 years plus of profitable trading plus security, and I think we're going to see a lot more businesses that can't show that, particularly the security side, because their assets are IP and things of that nature. So I see it as only a positive of moving it forward to having a diverse marketplace, of which banks will still always be prominent, and 60-70% of all lending will still go through our banking system. So, but more alternative to support.
Brilliant, thank you. Simon's made an interesting point. He's thanking for the interesting presentation. Remarking on what this has done for the economy, he says IKEA are proposing to pay back their government furlough money. Are others going to do this?
I think that's fantastic. I saw that headline either last night or this morning as well. So I've not been aware of anybody else putting that. We obviously had the early stages, some of the Premiership football clubs trying to furlough all their staff and then bowing to public pressure not to do so. So I thought that was a great move by IKEA. I wouldn't be surprised to see in the IKEA is a great cultural business. I wouldn't be surprised to see more of it coming forward, and of course it'd be welcome. I think the government has done what it should of stepping in short term to shore this up and make things as easy as they can in a very difficult circumstance. But it'd be great to see that thank you coming back in that format. So we'll see.
Yeah, we will. Our Chair Muir is asking particularly about the Southwest here. Do you have any insights into if we're responding differently to the rest of the UK? Any particular characteristics?
So there's a few. I think as we sort of move around the Southwest, the sort of Bristol axis has got a lot of high tech, which have been able to get supported from either their funders or using some of the new schemes, particularly around the healthcare, which was getting quite strong, and deep health tech. Some of those businesses are actually seeing 200-300% growth because things have been accelerated for the right reasons. I've seen quite a few office supply type businesses, which are now PPE supply businesses, and that PPE not to hospitals but into businesses that are reopening, so the plastic screens and the face masks and different things that businesses are using to reopen, and the stickers on the floor, etc. So seeing some versatile. I think the deeper south, obviously, quite a heavy reliance on agriculture and food, which we've seen the growth in, and that will continue. But also the great piece of tourism and hospitality, which is probably the one that any chart you look at as hospitality, tourism, and creativity or creative as the top of the under pressure. And I think the deeper south, or deeper south sounds like America, the deeper south around Exeter, Plymouth axes across to Dorset, we are seeing that pressure of how they move. That said, again, I've joined a number of calls, and the positivity of how people are trying to find ways of growing out of that and reopening their businesses is really good, but they're definitely going to need more support going forward.
Yeah, we've got next week, this session next Tuesday, we've got John Shreves from Taste of the West, and they lobbied MPs and DEFRA about the impact on food and drink industry. So it'll be interesting to hear what he's got to say. So I'll put a link in the chat shortly to make sure everybody can jump on that call as well. Winston, Sybil's ends 30th of September, BBL on the 4th of November. What happens then?
Very good question. So that's the conversations that are currently going on. So the reason for September is that's the technical state aid on which temporary state aid on which these schemes are actually based. So that's obviously part of Europe. I believe there is mechanisms that they can extend that for another period. That said, it's European state aid, and come the end of the year, as we're hearing overnight, Brexit is likely to happen and that relationship change. So by the end of the year, something has to happen one way or another. But where the conversation's more moving, what we're seeing now is more of a flow of taking these loans on. We're not seeing massive peak demand that we were seeing in the first 2-3 months. There's definitely a lot still going on and coming through, but we're not seeing there's nothing that leads to say that beyond September we need these schemes. But I think it's anybody with any sort of guesswork would say that we need something to help. Maybe that needs to be sector driven, maybe it needs to be broader. And those 16 workshops that just 16 that our guys are involved in, I'm sure there's far more going on. All that lobbying is going to lead us to come out with something over the next month or two to follow on in October. Whatever that looks like, some of it will be support, some of it will be financial, but we'll share that as soon as Treasury and everybody else signs off on it as we move forward. But it's in the early stage, so it's 6 weeks or so of really thinking through what that next stage is, and in the meantime we've got COVID loan schemes to actually support us.
Super. Okay. A few comments in there about other organisations committing to pay back their furlough money and whether that's more to do with dividend and bonus protection. James, do you see a good proportion of recipients using this money to use technology to move into new markets? Is it causing a leap in business development? Certainly it's helped me. What's your thoughts on that?
Well, sorry, can you hear me all right?
Yes, James.
Yeah, it was interesting because the funding circle comment I certainly recognise, and the alternative markets. I mean, and I think you're right. Obviously, some people know my area of expertise is care homes and the care home sector. So, but even in that market, you're not often dealing with operators rather than people that got great stocks of buildings and stuff. So, it's, yes, if you're just dealing with a pure software company, then of course your intellectual property is your software, and really you've just got people. So I think the fact that that this is accelerating the move to these markets is a good thing. And I've heard an anecdote a couple of times now, which is, whatever direction of travel we were going in, whether it was doing more things online, whether it was the retail sector getting hit, whatever, 3 months has become 5 years. You can debate whether it's 3 years, 4 years, 5 years, but it's just accelerated everything to such a degree. And I mean, the example you just given, Paul, about how traditionally very conservative banking markets want to do all the due diligence in the world before they launch a new product. You just had to get off your ass and do it, as we all did. So yeah, it's very interesting talk.
Super, thanks, James. Does anybody else want to wave at me and ask a question and unmute yourselves? Because I can now see everybody. Just reading in the chat, the poor take-up of civils is our experience because the banks require tangible security, something you mentioned earlier on, too busy with their existing customers, have a very, very low credit appetite. Yeah, I mean, that's a comment. You've touched on that, I think, already, Paul, haven't you, really, about the bank's perspective?
Absolutely, yeah. Very, very safe lenders. That's where they come from, protecting that 20% where they have still got liability to it. And actually, from their perspective, also trying to make sure businesses are viable into the future, and they can do repayments. So you can look at it two ways, really. One being slow to get money out, but two, actually taking some care and due diligence before they lend. But we'll have to make our own decisions what was the right thing to do in the circumstance, really.
Okay, that's great, thanks. Any other questions for Paul while we're here, or comments? We've got this great opportunity. Yeah, Winston, do you want to unmute yourself and feel free?
Yeah. Just any chance, do you think, of a more level playing field for the alternative lenders, with the big banks getting the money at 0.1%? I'm on the board of 2 CDFIs, so just wondered if it might level up a little bit with the alternative lenders.
Yeah, so again, there was quite well publicised in the first weeks when we started to launch civils and other schemes. The Bank of England eased some of the capital burdens on the banks, but most of that actually helped the big five or 10 if we go into some of the bigger challenger banks rather than the alternative. There was some change to without boring, and not being able to talk about it funny, but we did change some of the capital appreciation and the way capital was viewed for Sybil's and Bibbles to ease that through, which made quite a big difference. Mainly, but that's all been passed on to the SME, but we've seen it, and there's definitely one or two of the debates are going on about how we do level that playing field. I don't think we'll get to level because at the end of the day, the cost of funds for a bank comes largely from the deposit base that they have, and then from that the great strength and ability to use wholesale markets. So I don't think they'll ever get level, but they can definitely get closer than they currently are. And I know those conversations are happening, but they're above me. They're in Treasury and various places.
Brilliant. Thank you.
Good question, Winston.
Any other thoughts? Yes, let me do one at a time. Ian, would you like to go first?
Yeah, thanks. No, I just wanted to perhaps add to that. So I don't know whether you're aware, but my business is 1PM, one payment monthly, it stands for in Bath. So we are an alternative funder ourselves, and we've been lobbying very hard with the Finance and Leasing Association and UK Finance to try and do what Paul has just been talking about, to try and get the government schemes more aligned for the non-bank finance providers, because I certainly felt that we've been at a disadvantage in not being able to get the government funding money deployed quickly to SMEs. So, I mean, in our case, we've applied to become accredited under the CBIL scheme, and we've got that. So we're now lending to small business. But I wouldn't expect that level playing field to be fully leveled up, and I can understand that because non-bank finance providers like ourselves will probably never be regulated by the PRA in the way that the banks are. So I guess you have to sort of, play one off against the other. But the money is getting through now. I just wanted to underline that point. I think as you've shown in the stats today, Paul, it's good to see all that funding coming through, particularly in the bounce back loan scheme.
Brilliant.
Thanks, Ian. Good to see you.
Thanks, Ian. Simon, I think you had your hand up too. Did you want to unmute yourself and ask your question?
Yeah, hi Paul. Simon Duncan at Close Brothers. I mean, it looks like pretty dramatic, pretty amazing success story the last sort of 6 months, and we haven't really heard much about the British Bank, Business Bank before. Is the government now going to start sort of marketing or pushing it or promoting it, or?
Yeah, so two things on that. One, our remit is still to be a wholesale funder, and from that point of view, there isn't a lot of reason for us to be extremely well known, apart from in certain circles, obviously. But the part that is more important to us is the regional imbalance and helping SMEs to find access to finance, understanding finance, so they can make informed decisions. And for that reason, we need to raise. And part of my remit is to become known and to move myself around the southwest, which any of us will know is quite a big geography to sort of move around in. But that's part of it. And then we have got something that would have happened and will still come. There's a slight rebranding and with it as new visions and all that good stuff that marketing people do. But seriously, the message behind that will be a lot more about how to make us more accessible directly to SMEs, to build on that agnostic support and what works there. So it'll be a two-pronged attack from both marketing and launch, and however that happens is for other people. And then me continuing to stand on stages and join meetings such as this, which I've got to say Zoom has made it a lot easier to get a bigger reach. But as we move forward, definitely to promote, not for our own end of letting the British Business Bank be known, but to make it a trusted place for an SME to come for advice and guidance.
Brilliant. Thanks,
Thank
Paul.
you, Simon.
James Savage, as he's waving at me. James, do you want to unmute yourself? And
there we go. Yeah, hi, Paul. Thanks very much. Really enjoying the chat. I also want to go back to my question. We sort of kind of got a little bit sort of sideways answered. I just want to try and make it a bit more clear than I put earlier, which is, are we seeing a good number of these smaller businesses starting to use this money in technology and sort of move into new ways and new markets? Are we seeing a big leap in sort of business development generally as this money? I mean, you always hear, that in recessions, a lot of stuff gets smashed up. But one of the upsides as we come out through this part is that totally new practices come out, which are much more efficient and generally, can have a lot of upside. It's heartening if we can begin to see that already, but I'm not sure where we've got to with it.
So for my side, it's definitely early days to have proper research, what actually happened and where did the money go, because it's so new and working its way through. But anecdotally, the conversations I'm having right across the patch, and that from Gloucester to Cornwall, Swindon to Dorset, has been very much around using the money for online presence, working with growth hubs and various other support mechanisms. Their online marketing type courses are, which were already well subscribed, and now double subscribed, if not triple in some cases. And one of the big pieces that come out is the hitting onto things like productivity and improving productivity within business, which we've been talking about for some time, because the productivity, as we know, is poor in the UK compared to some of our Western counterparts, but is also slightly worse in the Southwest to the rest of the UK, or a lot of the UK, definitely the UK norm. And what we've seen is a lot of move towards technology, streamlining, digitalizing processes and things of that nature. Some of it forced, because we've had to work from home in a lot of businesses and be apart from each other, and finding better ways to do stuff and automate has definitely driven that through. And then speaking to a number of my, some of our fintechs and tech businesses that work directly to SMEs, most of them are reporting between 20 and 50% uplift in inquiries and work they're doing, albeit they've got to do it remote. So using that anecdotally, I believe that some of the productivity will be closed, and we will see a move to a lot of the SMEs being more efficient in the way they work. I think we've all said it. We're having this meeting now. If this had been 10 years ago, I'm not too sure how we would have coped, but the technology we all have at our fingertips has been phenomenal. And I speak to my 86-year-old mother now on Skype, and that sort of thing on a more personal level, but business-wise and connected, I just think it's fantastic. So I see nothing but a kickstart to a new way of being, and the meetings seem very positive, but we'll wait for the empirical data to say that that's what's happened.
Yeah, I mean, I'd support that. I've certainly got a lot more uptake through being online as opposed to face-to-face, and that may well become our new normal for lots of different areas of work that we do. So ladies and gentlemen, are there any more questions for Paul before I hand over to our lovely chair in the Southwest region, Muir MacDonald? I'm keeping my eyes going round, looking for a waving hand. Paul, that was absolutely fabulous. Thank you so much. You can tell by the questions that you've had and the comments in the chat that that's really useful and interesting to us. So can I thank you again for your time, because I know how busy you are, to take time to come out and talk to us like that. It's really, really helpful. And there's lots of thumbs up in the chat as well.
Anytime.
And some clapping. Muir, can I hand over to you then to do parish notices?
Thanks so much, Jill. And my parish notices are very simple, but to really build on your thanks on behalf of everyone. Thanks so much to you, Paul. And I know that Susan Elliott is listening in, checking up on you, also from the bank, for your time today, and how well you've unpacked what you do, and a splendid conversation. So thank you very much, and thank you so much for what you're doing, not just for our members, those around this table, but for the whole country. It's really important, and it's very impressive, and I think we've all learned something new today. So keep up the very good work, and thanks again. My thanks too to the audience, all members of the Institute, and possibly some guests as well. Thank you so much for being a part of this and joining in a very good conversation. I would say that wherever you are as a director on this extraordinary roller coaster, thanks too for what you're doing in keeping your show on the road, keeping the nation's show on the road. Don't hesitate, of course, to reach out not just to the BBB, but the Institute's own coronavirus hub. There's plenty of material there as we sort of come out of the other side. It's all quite messy, but there's plenty of help out there for you all. And just on that, most people will know that during the crisis, we've had a drumbeat of a weekly newsletter update from me, from the gang. So we've just decided that since the news is sort of slowing, we're going to do that fortnightly. So we won't be filling your inbox this Thursday at 8:30 with a missive, but it'll be a week on Thursday. So look out for that, and we'll see what new we've got to share. And lastly, kind of a double part, thanks again to Jill for hosting this, and to Sarah in the back room for making it all happen. Jill's going to hand over the baton to Guy Tulberg, to host next week. We have, as Jill has just said earlier, this fits so perfectly with what we've heard today, and the timing is immaculate. John Sheaves from Taste of the West, talking to how he's been working on behalf of the food and drink industry. We're all consumers of that industry, if not suppliers in it. And he'll be talking to what he's been doing behind the scenes, much as the BBB has been doing, working with government, and the timing couldn't be better as we look to see where the hospitality and the drink industry, etc., is going. So do, everyone, please tune in for that with Guy and John. And meanwhile, keep smiling, keep staying safe, keep staying alert, keeping the show on the road. Until next Tuesday. Bye, everyone.
Thanks, Muir. Bye.